Hello, my name is Steve Bigelow with the Candlestick Forum. We saw the possibility of a reversal that just turned into profit taking. As we saw, the Dow did a big bearish engulfing signal on Thursday. What is today? Today's Thursday, on Wednesday. But note the most important factor of candlestick signals in conjunction with the T-line. They didn't close it below the T-line. The uptrend remained in progress today with the evidence that they opened up positive and traded up positive, still not closing below the T-line. The T-line is a very vital factor of showing what's happening in human nature. It acts like a natural support and resistance level of human nature. Also over here, evident in the NASDAQ that had a lousy looking trading day on Wednesday, but today they opened it positive and traded positive once again, indicating that the T-line is not being breached or sold back below. So this allowed for identifying some of the strongest patterns, like the fry pan bottom. We were in Lucid today because of this fry pan bottom buildup. Remember, we started recommending it based upon this best friend signal. Once again, there's a very simple T-line rule that as long as your fry pan bottom trajectory stays above the T-line, you can stay long. And notice what it did on Wednesday. It opened and traded lower. Not good when it's supposed to be breaking out. Took some profits at that point. But what's the simple rule of a trend kicker signal? Look how they opened it positive after they opened here and traded this way. If they're opening positive when a pattern's still in an uptrend, you could be buying back immediately. Now, do we always expect price moves like this? This was up like 30, 35%, up as high as 40% during the day. No, but it puts us in positions where you get the exact timing for high probability. Spelled that wrong, didn't I? Probability trade setups. Same scenario over here on VRAR. It allows you to be prepared for when a breakout is about to occur. Again, the rhetorical question, you always get big moves on a breakout? Definitely not. But it puts you in situations where the probabilities are greatly in your favor that you will be participating in a big price move. So even if the breakout isn't confirmed as our recommendation and ear, notice the wedge. Whenever you see a fry pan bottom breakout, it's usually the result of something changing investor sentiment. But even if it doesn't occur right away, at least you're now in an area where something has changed investor sentiment. Get ready for a big price move. So anytime we see strong signals, remember we recommended mime based upon the best friend gap up above the T-line, and then we re-recommended it when we had another best friend break out through this resistance level. Well, today, look at the kicker signal, back up through this resistance level. And what was the one facet about staying in this position? They never closed it below the T-line. Even though there was some selling, it didn't hit that final confirmation. The fact that they gapped it up and started trading positive tells us there's still a lot of strength in this move to the upside. So just as much as you can analyze very successfully what investor sentiment is doing based upon a trend, support levels, and the signals, it works just as well. Candlestick analysis just allows you to observe the obvious. Notice on Medtronics, it's in a downtrend. And then when it hit the 200, bounced back up, there was your bearish left-right combo, a very strong sell signal, and a close below the T-line. What's the basic assumption? We're still in a downtrend with the prospects of it coming back down to the bottom of the trend channel. Again, this is not rocket science. This is just accumulating the visual analysis of what investor sentiment is doing at specific levels, technical levels, the T line, and observing what the overall trend is. So right now, as long as the markets continue to stay above the T line, we've got to assume the uptrend remains in progress. However, the other little flag there is we want to be a little bit more cautious, being up here in the overbought area, that we have started seeing some selling. We want to make sure the buying is confirmed, especially getting back up through this level. So everything that we analyze in a candlestick chart is just common sense. It's not anything that you have to be a sophisticated analyst to figure out what's going on in a price move. That'll be it. We'll see. Oh, we are going to be doing a full day training in about 2 or 3 weekends. I don't know the exact date yet, on a full day training on how to use the T line effectively for identifying when to get into a trade, when to stay in a trade, when to take profits, where to set your stops, everything that is included with a successful analysis of what is the T line and the signals telling us in conjunction. That'll be it. We'll see you in the chat rooms.